Welcome back to the channel. Today I'm going to be valuing Cisco stock. I'm going to put a price target on the stock, and I'm going to be using a discounted cash flow model to find its intrinsic value. Here we have Cisco's 5-year chart. Dividends have been steadily increasing from 26 cents per quarter to 36 cents per quarter. The stock reached a high of about $58 per share in August 2019. It has since traded down to about $45 per share today. I've been building a position in Cisco and believe it to be undervalued. I pulled up Cisco's financials on Morningstar. The most important data point for a DCF model is free cash flow per share. Cisco has updated their financials to include year 2020, so I'm going to start with that number. When I run a DCF model, I usually use free cash flow per share from the 5 years prior to calculate the compound annual growth rate. I use the compound annual growth rate to project cash flows into the future. If this seems confusing, don't worry, I'll show you how it works now. These videos do take quite some time for me to make. I am giving out free information, especially with my stock model. So if you could please hit the like and subscribe button, I'd really appreciate it. It helps grow the channel. For the DCF model, we're going to start with the 2020 free cash flow per share, and we're going to get that from Morningstar. Here we have the 2020 free cash flow per share, and we're going to enter that into the DCF model. Next, I'm going to enter the 2015 free cash flow per share. Here's the 2015 free cash flow per share. This gave me a compound annual growth rate of 11%. Assuming the same growth rate, a 10% discount rate, which is the annual return of the S&P 500, a 3% GDP rate, this gives us an intrinsic value of $64.49. However, I actually think that the future growth rate for Cisco is going to be slightly less, so I'm going to assume that it's about 8%. The reason being, there's a lot of competition with companies like Zoom, Microsoft Teams, etc. People have realized that they can work from home. Businesses are not going to probably be using as much Cisco products as they have in the past, but with an 8% growth rate, this gives us an intrinsic value of $56 per share. With it currently trading at $45.58, that's still 24% upside. I started building a position and my average cost per share is about $40. So that actually has 41% upside for my average price. Regardless if you get in at $45.58 and you think, oh, I missed the opportunity, there still is room for this stock to run. I'm fully confident that Cisco is going to do well in the future. They have a strong dividend growth, and the stock is going to be poised to do well, especially with Internet of Things. In my last video detailing Intel's valuation, I mentioned that I'm very bullish on Internet of Things. I think that Cisco is going to be a huge player in the IoT space. Smart devices are going to be needed to be powered by routers and the internet, and Cisco provides that capability. So although that they may not grow at the current compound annual growth rate of 11%, even if they grow at 8%, the stock is still significantly undervalued. It is also worth noting with Cisco that the shares have been decreasing over time. Cisco has been buying back shares of its own stock. When a company buys back shares of its own stock, it believes that the stock is undervalued compared to the market price. I find this to be a very bullish sign. If we do in a very aggressive bullish case and say that the stock is going to grow at 14%, assuming a 10% discount rate, GDP growth of 3%, this is going to give us an intrinsic value of $73 per share. Currently at $45.58, this is 60% upside. I think that with the market being so heavily focused on all these high growth tech stocks like Cisco and Intel in my last video are being overlooked. The margin of safety is there with Cisco. Margin of safety is when the intrinsic value is significantly higher than the current price. My intrinsic value is 56 on the worst case, 73 on the best case. I'm going to stay conservative and go with an 8% future growth rate. Even though it's an 8% future growth rate, it still has 24% upside. I give Cisco a $56 price target, and Cisco is a buy.